As we watch Florida deal with 2 back-to-back hurricanes, I'm wondering how many people stay in the area once the dust settles. You'd think that if you or your house, for the purpose of today's blog, survived a natural disaster as major as a hurricane, that would be a once-in-a-lifetime experience. It's not, though, because as we're seeing, Hurricane Milton is touching down just 2 weeks after Helene, just 2 years after Hurricane Ian affected the same area. So today's question is, what happens to the home values, the real estate market in these disaster-prone cities when the locals finally give up? Natural disasters are bad for obvious reasons. Today we're going to talk about the reasons specific to property values. When you consider a natural disaster, like an earthquake or a flood or a hurricane, you'd think, well, we lived through this one, so we've probably got like a couple decades before the same exact thing is going to happen in the same exact area. Nowadays, and I'm not going to get into the whys in the debate on global warming and how often these events are occurring, let's stick to the focus on real estate market. We know that if your real estate survived a major event, it doesn't mean anything. The next one could be just days away. Historically, natural disasters decrease home prices in cities because it takes years to rebuild the infrastructure. Many citizens will also give up on the area and choose to move to a less disaster-prone city. If you're interested, by the way, the 5 cities in America least prone to natural disasters are Juneau, Alaska, Vancouver, Washington, Anchorage, Alaska, Lewiston, Maine, and Casper, Wyoming. Interestingly, but not surprisingly, the median home price in Juneau is 25% higher than the national average. Vancouver is 11% higher. Let's talk about Hurricane Katrina, the exception to history when it comes to home values crashing following a natural disaster. The hurricane did wipe out entire neighborhoods, but that led to a housing shortage. Many left, but many stayed, and investors saw a big opportunity to renovate these damaged homes. It's true that the city continues to face challenges when it comes to infrastructure and economic inequality, and the recovery in home prices has not been across the board. Still, home prices overall started jumping significantly within just a few years of Katrina, and in some places, prices were up 80% in the decade that followed. So what's different now versus then? A housing shortage. A nation that has been underbuilding since a not-so-natural disaster hit the housing market in 2008. So while cities directly impacted by the disasters will certainly see a drop in home values while they rebuild, what happens to the prices in the surrounding areas that have already been pinched when it comes to affordability? This is where a natural disaster layered on top of a housing shortage with an affordability crisis sprinkled on top gets really depressing. Fires aren't great either. We're very familiar with that here in northern Nevada. We have our own fires to deal with, plus the California fires, then the smoke from the Oregon fires also impacts us. And it's starting to impact our insurability. It's being called a crisis of its own, the property insurance crisis. Several hundred homeowners in northern Nevada just this year had their policies canceled, straight up canceled, due to wildfire risk. The cost of insurance for many of my borrowers is climbing dramatically, if attainable at all. Insurance companies want to review the inspection and the appraisal before they issue coverage. We now deal with repairs required, not by the buyer, not by the lender, but by the insurance company before we can close. And this was before the Washoe Valley fire. So, is a Nevada FAIR Plan on the horizon? You may have heard about the California FAIR Plan. It was actually started in 1968 and created as a last resort option for homeowners in high-risk areas to be able to obtain insurance when no one else, every carrier in the private market, had denied them. Here's the interesting thing about homeowners insurance, specifically fire coverage, as compared to flood insurance. Flood insurance, those zones are federally regulated and drawn by FEMA, not homeowners insurance. The Department of Insurance in each state has their own authority, and in Nevada, carriers are not allowed to segment zones based on fire risk, but they are allowed to choose to completely not cover homes in certain areas. It's all carrier by carrier, and when I talk to my friends in the insurance industry, they say it's a literal nightmare. So do we need a Nevada FAIR Plan? It would give everyone access to insurance. Think about healthcare, though. The exchange allowed access to everyone for insurance, and it also increased the cost of insurance for everyone. The California FAIR Plan is not what I would describe as affordable by any stretch of the imagination. We have to have it on our lake house, and the premium is upwards of $5,000 a year, and we still need regular homeowners insurance in addition. But on the other hand, we wouldn't have been able to buy the home if it wasn't for the California Fair Plan because no carrier was willing to issue insurance, and you have to have insurance if you have a mortgage. So do you see how the burden of insurance could possibly impact home values? I want to say that it will. But I also saw when interest rates hit 8% and home values didn't blink. They won that stare down because the demand so far exceeds the supply. I'd love to hear what you guys think, especially with all the building that's happening in Reno. Toll Brothers is buying land everywhere. Tons of toll houses going up. So chime in. Tell me, do you think that the burden of insurance impacts our home values? And before I wrap this up, I have to give you a little quickie update on the economy because interest rates are up 0.5% since the jobs report last week. It really blew up my day. Everyone started talking about a soft landing again. Nobody remembered the potential of a job loss recession that we were very worried about, but the jobs report revised previous months' readings on numbers up. But we don't have to worry about a job loss recession. Now we have a new scenario to discuss. No landing whatsoever. Maybe the U.S. economy just keeps growing, and that reignites inflation, and then the Fed doesn't cut shit, let alone interest rates. I'm not being dramatic, guys. That jobs report last Friday was solid, through and through. Plus, the 10-year break-even rate, which measures bond traders' inflation concerns, was at a 2-month high. Are we at risk of overheating? CPI numbers for September say maybe. Inflation slowed, but not by much. Not as much as we were expecting. Prices were up 2.4% from a year ago. Last month, they were up 2.5%. So yes, we're getting closer to the Fed's 2% target, but at a snail's pace. Most economists were expecting a reading of 2.3% to come in this morning for September. PPI comes in Friday morning. I'm recording this on Thursday. Let us pray.